Creamer Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council. Trevor, could you give us an update on the outlook for the platinum price?
I think this year what we've already seen is platinum has traded above $1,100 an ounce. I mean, that's over 80% above where it was at its lows in March. We've seen the strong price performance, yet platinum is still undervalued compared to gold, undervalued compared to its precious substitute metal palladium. So I think there's still quite some way for platinum to go. Certainly a strong gold price is good for the platinum price. And then we've seen the improved economic outlook. I mean, that's already reflected in copper, for example. The positions on the futures markets are starting to build. Copper, for example, are at 3-time highs, their futures positioning, but platinum's probably still half the level it was a year ago, so that's building strongly. So I think platinum price has probably got a good, strong chance to move strongly towards the gold price and towards the palladium price. And certainly it may be edged on a little bit by incredibly strong rhodium prices as well, Martin.
And what are the drivers of the platinum demand?
Probably the most material driver is the substitution of palladium by platinum. I think we're starting to see widespread recognition that it's happening. It's still proprietary and confidential, but we're starting to see some kind of, estimates of anything between 1 and 1.5 million ounces of substitution. People are saying by 2025. It is our view that it's happening a lot quicker and a lot sooner. But that's quite a material growth. If you're looking at another, 1 million ounces within 4 years in the platinum market, that's pretty strong demand. Also, the other thing that's driving demand is investment. People tend to want to not look at investment too strongly, but we've had 1 million ounces of ETF demand in 2019, another 500,000 ounces in 2020. And certainly investors are believing that there's likely to be platinum demand growth from substitution, from higher vehicle loadings, and certainly from the global economy. So I think the investors have seen that this demand growth potential is strong. I mean, it's the strongest I've seen, Martin, in the last 6 years since we've been doing what we do. And certainly, I think, the strength of that demand growth looks particularly strong.
What is the outlook for supply?
I suppose the difficulty with supply is that we've had years of weak platinum prices. If you look at the strong earnings that have come out from the platinum PGM mining companies recently, Sibanye and Anglo today, I think there's a large amount of earnings. Share prices are up and profits are good. But we've seen significantly increased PGM prices since 2018, strong earnings growth. Yet there isn't one major platinum expansion project that will deliver material demand growth in the short term that is currently underway. There's a lot of small ones. And most certainly those projects are under discussion right now, but that takes time to discuss, to approve, and then to implement. So for platinum to respond, you're probably looking at a 3 to 4 year period. And I think the demand growth is going to be a lot stronger, a lot quicker. So I think we've got certainly a constrained supply situation and very strong demand growth.
And the regulations which restrict vehicle emission, they seem to always tighten. Do you think that will continue?
This is something that's been spoken about a lot more, but perhaps overlooked to the extent. And I think the big driver really, Martin, is China 6. So China is implementing China 6, and we recall that emissions legislation in China used to lag that of Europe and of the US. It was always sort of 1.5 steps behind. The new China 6 regulations are more stringent than RDE in Europe and more stringent than what is in the US. So we saw in 2019 this massive increase in palladium demand for the mainly gasoline vehicles in China, and that certainly continues. So what we're seeing is that China 6 is making incredible demands on palladium and on rhodium. And those demands on palladium and rhodium are certainly resulting in platinum substitution, making huge economic sense and accelerating a lot quicker. Now, the other thing that emissions legislation is about is it's all about CO2. I mean, you remember the Dieselgate scandal, that's now more than 5 years ago. That was all about NOx. We've resolved NOx in Europe and around the world, and now the focus is on CO2. And it really is about efficiency. And despite all the bans that are mentioned and the suggestion that we'll move completely from internal combustion to electric, that is a long time period. There's still a huge park of vehicles on the road that need to be, the emissions need to be controlled and to be made tighter. And I think the efficiency, Martin, will be on the most CO2 efficient drivetrains. And that's where I think there'll be a lot more of the PGMs required to make sure that any hybrid vehicles that are internal combustion, any internal combustion engines, even heavy duty engines, are the most CO2 efficient possible. And that's really good for PGM demand. So you've got the entire PGM suite that is short, and that certainly will translate into tight markets.
And we hear about substitution, but when do you think it could become more public? Why is it not as public as we expect?
So I think you've got this the situation where the information about what the catalyst manufacturers, Johnson Matthey, BASF, and Umicore, what metals they put onto those catalysts is completely confidential. It's a very competitive space. It's very proprietary. So it's tough for those manufacturers to comment on what the automaker companies are doing. But just, you're saving on a mid-size US pickup, over $170 per vehicle just by substituting 40% of the palladium for platinum. So I have no doubt that it's happening. You're starting to hear, cautious comments of maybe 1.5 million ounces in 2025. That's 4 years away. We think that that's happening a lot quicker. So you're looking at maybe anything between 200 and 700,000 ounces of additional platinum demand required for the substitution. And that's certainly a big deal in platinum demand. You're also getting the limited supply growth, so it makes the market even tighter. And Martin, I think the one thing that you've probably seen, I certainly have over the last 7 or 8 years, is that a lot of people that were bullish platinum just got worn down and often embarrassed. And I think there's a lot of people that are just too afraid to be bullish platinum because they've been hurt so many times. And still, people want to ignore investment demand. But to ignore 1.5 million ounces that came out of the spot market that is backing ETFs, the ETF positions tend to be long. And the long view right now is that platinum is undervalued. It's going to likely play catch up. And the hydrogen economy, there's not a lot of demand growth, but it's brought more investors in. And when those investors come in, they can see substitution, much higher loadings, likely a longer internal combustion tail. And that's what's making investors interested. So if anything, investment demand is going to become more material, and certainly that supply-demand balance is impacted by investment demand without question.
And when we look at PEM fuel cells, are they inextricably linked to the hydrogen economy that we're expecting in the future? And, we talk of PEM fuel cells, PEM electrolyzers. Will it be PEM, or could it still be other forms of technology?
Okay, so there's two issues. The one is the fuel cell on the vehicle, and the other is producing green hydrogen. And just your first question, Martin, are they inextricably linked? I think the reason that platinum is used in a fuel cell to propel a vehicle is because of its size. Your home uses maybe 2 kilowatts, but you want 100 kilowatts in your vehicle to give you the performance that you've become accustomed to. So, the size of the fuel cell is large and the electrical current density is high. And it's only platinum really that can provide that kind of performance in a small enough unit to be on a vehicle. Secondly, I think what COVID has done is it's really focused the world on climate change, and perhaps with less funding because of the huge financial cost of the pandemic. So what you've got is that hydrogen actually is, if it's generated sustainably, a replacement for fossil fuels. And that's the big focus, and a much higher certainty that the hydrogen economy will evolve. And that certainly is to keep carbon emissions neutral, not only in transport, but in heavy industry as well. So the focus on green hydrogen has then highlighted the fact that if you use a PEM electrolyzer that contains platinum to produce green hydrogen from solar power or wind power, that is sustainable. So the question is, well, how much platinum does that mean? And it's interesting. It's quite good, depending on whether PEM penetration is 30% or 60%, and depending what the loadings are, you're probably looking at maybe 300 to 600,000 ounces of platinum demand from electrolyzers. And the question is, yes, but it uses iridium, and iridium is a tight market. The price has spiked. It actually really isn't about the PEM electrolyzers that's that important. The alternative technology, the alkaline electrolyzer, is just as well, it's not as efficient, but it's a perfectly good technology. The real key, Martin, is that if you can get the price of hydrogen down, then you can have more fuel cell vehicles. And fuel cell vehicle demand, that's really material for platinum. So in the next few years, whether PEM takes hold or whether alkaline takes hold, the real issue is cheaper hydrogen means more fuel cell vehicles. And if we look out 10 years, because that's probably the area, 8, 9, 10 years is when you're going to have fuel cell passenger vehicles. You'll have a large chunk of battery and a meaningful chunk of fuel cell vehicles that have been led in the short term by heavy duty. That's upwards of another 1 million ounces of platinum demand required for fuel cell vehicles. And that's really good news. So to see that demand growth occur is really what's important for platinum. And in the short term, you can still have your jewelry demand at a higher price, giving up metal to provide that fuel cell growth. So certainly that's interesting. And the package together, the fact that platinum is so strategic to unlocking the hydrogen economy, has led more investors to come and look at platinum. A lot of investors gave up on platinum, those that knew it. We've had a lot of gold investors. When gold reached $2,000 an ounce, a lot of investors said that looks like a plateau, and they used platinum as a proxy for gold. So we've got a lot of gold investors coming in, and then a lot of investors. I mean, we've worked really hard over the last 6 years to take this platinum as an investment asset globally to a lot more funds. And many of those funds said, yes, it's interesting, and didn't do anything. Those funds are all coming back right now because of the hydrogen link. And when they come back, they don't see demand growth from hydrogen. They see demand growth for the other things we've been talking about: substitution, higher loadings, more internal combustion. And that's really what's driving investment demand and keeping this market tight. And that brings us back to the first point we discussed, and that is price, Martin. This metal is, it's usable, it's predictable. If there's growth from South Africa, the growth will be focused on platinum. And certainly that makes the price of platinum look probably more interesting than since you and I have been speaking over the last several years.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council.